Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. So far, the Australian dollar has maintained its bullish stance since yesterday's gap opening in Sydney after the US and China agreed to ceasefire in their trade wars at the G20 summit at the weekend. The US agreed not to increase the tariffs of 10% on 200 billion that is, worth of Chinese imports on January 1, following talks between the US President and also with Chinese counterpart President Xi, is that both sides have agreed in a new trade negotiation with the goal of reaching an agreement within 90 days. If the agreement, however, is not reached by them, then the 10% tariffs will be increased to 25%. Later today, we do have the RBA rate decision and statement to follow. It is widely expected that the RBA will keep rates on hold. However, the statement may give some calls to see what the RBA is thinking and what sort of tone they're holding, whether that's going to be a hawkish or a dovish. The trigger level to the downside is at 73.15, and a break beneath there would give further exposure to the 60-day moving average, which is seen at 71.89. A break beneath there, of course, will give further exposures to the downside. Looking to the top side, resistance at this stage is around 85 and has been respected, although the market did break briefly above there, but it was soon staged a retreat. Overnight, the euro didn't stage any significant moves, and at this stage is still relatively contained by the resistance of 114.10.65. It is assessed, though, that any advances should fail towards that region, and I still look for a move towards 112.60 with the objective of 111.60 beneath. It is assessed that the market should continue to stage further weakness, even though it is trading sideways at the moment. But the market may be a little bit quiet to the midweek because we do have the US out in observance for President George H.W. Bush. It is seen that the markets will be closed in observance for the National Day of Mourning for the late president, and also seen as the 41st president of the United States, who passed away on November the 30th at the age of 94. So the markets may be a little bit quiet, but it would all start up again after that, when the Federal Reserve Jerome Powell is due to testify about the economic outlook to the Congress, either Wednesday or Thursday. And then by then, on Friday, we have the US non-farm payrolls report for November, which is likely to see the dollar lift up further. So I do anticipate a slightly bullish case still for the US dollar, and the market's weaker across the board. Well, the dollar yen is still remaining relatively weak, and I'm a little bit concerned the fact that we could still pull back towards the region of 112.15.20 with a cap seen at 114.20. Reassessment there to the downside as a bounce should re-emerge. The pound took a stab at 126.90 the other night, but didn't break it, but nevertheless still poses a threat and weighs on this level. A break beneath there would give further scope to the downside and to a target of 122 to 124. So do keep that in mind if we see a break. Looking to the top side, resistance is seen minor at 127.55 and firmer above at 128.50.70. Gold rallied overnight, and as you can see, the market is getting closer to its objective of 36. I ascertain we could even see a spike up towards 43 as demand increases, and especially with the US being out on Wednesday, could see a bit of safe haven demand emerging back in the markets. Support on the day is seen at 27, and beneath that 20 to 22. Well, oil gapped open, crushed the resistance of 52.55 and now looks towards 55.40.70 as an objective. It is just above this line that comes down as a broad downtrend, but I would allow a little bit of slippage before reassessing. The market is at this point dropping away from the ADX, but the rest of the market is still supporting for a test up with the support seen at 52.40. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the rest of the day that's ahead.